Hello, and welcome to today's stream. It's been a while. I've not streamed for a while. I am kindly joined by my friend, expert trader. I could throw on all of the adjectives, all of the descriptors, but yeah.
They're all
How are you
liars.
doing,
They're all
Justin?
liars.
How are you doing?
All right, mate. Not bad. Won't grumble. It's effectively Monday morning for us because obviously the thing was closed yesterday. And after having a very, I would say 2 weeks of probably slow, the market was slow, and then obviously we had Friday night's fireworks, and I think the market is now looking across the board, is just trying to find a settling point and trying to work out what it is and how they're feeling.
Yeah, it's been an interesting one, hasn't it? Obviously, we've had probably the biggest news pump I can think of for quite a while on Friday. It feels like it came out of the blue. I guess that was in terms of what today's subject is, price action, and sort of how price moves and how people move the price, because I think a lot of the price action last week was not particularly natural. It goes to show, doesn't it, just like how that can set up. I mean, we spent the week pretty much built up to hear Jerome Powell come in all doom and gloom, and then for him to say what he said. And I must admit, I wasn't overly enamored by what he said. I think
well, that was his last speech, or it was his last Jackson Hole, or whatever it is, until he's out. I don't know. The things I know about it, and I was talking to the likes of Christian and Munir or BlockPro about it, and in my opinion, the metrics that I was looking at, it was likely to pump. Purely because of where the charts have been walked to, and that's gold, whether it's the indices, whether it's crypto, everything got walked into a certain position. And to me, it looks like it was flipping bullish on Thursday, even though we were right. Yeah. And to then just have that come out, they clearly knew what was going to be said, or whether it doesn't really matter what he was going to say. It was going to do something anyway. But it was the low volume in August, the low volume in the charts leading up to Friday was really, really prevalent, and then Friday happened, and everyone pressed the excited pump button.
And then got profit taken on them very swiftly on Monday morning when the bankers came back from Jackson Hole.
Yeah, but even that, I mean, I tend to not bother looking at charts too much at the weekends these days. Did I see somewhere that someone market sold like 7,000 Bitcoin or something like that on Sunday?
Yeah, someone market sold, I think it was like 2.5 billion of Bitcoin in 15 minutes.
Yeah. So to me, that is someone's clearly manipulating the price. Do we know? Was it from a single wallet, or was it?
I think so, and it was identified that he had a lot more left to go, but he essentially sold it and moved it straight into Ethereum.
So Ethereum got crushed as well.
Yeah, part of me thinks I wasn't around. I was out, but I think that might have been the catalyst to push ETH up to around 5K. Before then, everyone just decided to take profit on this poor fella who was just moved from Bitcoin. And it comes back to like these things: is if you're going to sell $2.5 billion of Bitcoin, like why wouldn't you have done it when it was 125k? Why would you do it when it's 112, 113?
Well, me being the slightly sinister character that I am, this was a coordinated effort by the exchanges that basically just flushed liquidity. That's it. And again, I can see why people are going down like the hyper-liquid route and stuff like that, because the centralised exchanges, the manipulation they have over price. Now, they've got all of the when you're signed up to Bybit or Binance or whatever, they have all your liquidation prices. They have all of the data that they possibly need, and all they need to do is go, it's enough liquidity, boys, to collect, sell, and just crush everyone. And they're not your friends. They're not there to assist you. And they've got all these lovely, shiny platforms, and they'll probably way more so than TradFi. But they are very much working against you. They'll let you win sometimes, but if they allow certain amounts of liquidity to be built, they will kill you every time. It's quite funny.
They'll throw you enough bones. They'll throw you enough bones to keep you there. But I always feel slightly. That's the one thing I think hopefully comes out of as we move more mainstream and get more legislation. Is I'd like to see more regulation on exchanges to not publicly release those liquidations. And I always find it when people look at liquidity heat maps and all of that stuff, it makes me feel slightly uneasy because ultimately, like, you should be able to trade without that because you shouldn't really be able to see that. It's a bit uneasy for me.
Well, the thing is, the same as exchanges, brokers and stuff will give you free courses to like how to pattern trade, how to do this. It's there to basically go, we can manipulate you into a position and you will fall for it. And I mean, as much as it's more prevalent in crypto, I think, but it's just as you look at what happens in gold. I mean, a few weeks ago, do you remember that one random afternoon when suddenly it was like 5 to 3, no news, and then suddenly gold puts in like a 1,000 pip candle kind of thing, and then indices are going the other direction. So anyone that thinks that TradFi is immune to this is mistaken. The same thing happens. The thing is, at the end of the day, exchanges, liquidity providers, fundamentally have one job and one job only: provide liquidity and collect liquidity. That's it. And I genuinely think, which then obviously is a nice segue into talking about price action. I don't think people fundamentally understand the roles of what people provide in the market. So your brokers, your exchanges and stuff, what they're actually doing. So you look at we can do Ethereum chart in a minute, but for every time you're longing something, the exchange has to provide the other side of that trade. So hence why we get liquidity flushes. So if you're massively long on something, or the whole market is, they've had the exchanges are in a massive loss because they're taking the other side of the trade. And that is why the charts never lie, and the price will go to where the price needs to go to, because they have to balance the books. That's it. That is.
Yeah.
And if people don't understand the role or where we fit into that process, you will never understand how to trade. That is, and no one really talks about it. What the roles are and why price moves into certain places. And I think that's what you wanted to talk about today. So it's kind of a good segue to get into it.
Yeah, I think ultimately, I think we've got quite a lot to talk about in terms. So obviously, I think there's the major news now of we've seen some quite interesting price action. I think talking through, we can probably provide an update on the market by also talking about price action and how that impacts. So should I share a chart, or would you like to share a
far
chart?
away. You chuck on your chart, and then we can put up whatever we want.
So I am clicking share screen window, and we can do a little stream trade as well. What have I got up in here? Siri. Shall we start with ETH? I will get a naked chart on just so I don't give too much away.
Just do ETH USD.
Oh. I'm long on Mexi. I forgot about that.
If you do ETH USD and then just go on, you can go onto the crypto chart rather than the crypto. Oh, I can't remember what it's called. So I always use the crypto chart. That one there.
This one, yeah.
So if you go onto the weekly to start off with, and you look back to the high of 2021, and then if you really if you zoom into that area a bit, first and foremost, 2021, yeah. So what you'll see is the structure of the candles. So what I find quite funny is if you know how to read charts, you can see where liquidity sits, true liquidity sits. And then you compare that to heat maps, and it's quite funny, the inducement that is created off the back of those heat maps. Whereas if you look at that formation, probably from like the high down for the next, was it November? You look at the structure of the candles, the first probably half a dozen. Very little bodies on the way down, lots of wicks. So to me, anytime you see wicks on charts, that's liquidity. That is a telltale sign of where liquidity sits. And you can effectively, I tend to use boxes quite a bit to identify liquidity. And if you kind of pull a box over those main wicks from probably November down to probably December, and then like from the top like the high from 4.8 down to say the wick at back there, and then you then scroll across to present day price action, and right, so wherever you see wicks, there's liquidity. Wherever there's liquidity, it's unmitigated. So you can probably reduce the box because you can see the highs of where we failed to. If you do the bottom up, the highs from around about 4,000. Yeah, about there. The candle closes perfect. So that is the zone that needs to be mitigated. That's where all of the open orders, when people were shorting back in 2021, the exchanges have provided the long side of the trade to people shorts that probably sat there. So that is where a range will ultimately need to be, because you need to mitigate those open orders. And so people look at fair value gaps and all of the stuff that the people teach you on the exchange websites and stuff like that. And they are valid, 100% valid. But here you can see, right, very clearly, you lose 4,000, it's not good. That's kind of the level to hold, I would say. So if you're looking for high time frame stuff, and again, I think a lot of people fall into the trap of looking at charts and starting on like the 15-minute, and then their idea of checking the high time frames, clicking onto the 1 hour chart. if you, it's true. You look at virtually every
Yeah.
single person that will be advocating trades on certain portals, on socials. They will be looking at the 15-minute, the 5-minute, and they might check the hour. If they're feeling really, really racy, they might they might check the 4-hour. The market makers, the exchanges, the people that really matter, they do not care one iota about low time frame stuff. They are purely looking at the weeklies, maybe the daily. That's it. So getting back to here, you can see where the wicks are, right? You can see where the liquidity sits. So if you know where the liquidity sits, you know therefore where there's likely to be a range formed at some point. So that liquidity that sits there could be used as we range there. What we're doing, not only are we mitigating the orders from 2021, we're also building new liquidity above and below the current price action. And then that liquidity, the fresh stuff, is creating the fuel for the next move out of the range. And that's basically that's the basis of how price action works, the way I understand it anyway.
Yeah. Essentially, we're just moving to collect liquidity to move to a new area. Yeah, it's an interesting chart as well. I always, especially when you look at stuff on the weekly and on the monthly, because I look at this and I think if I'm looking near term this week, that's a very, very bold candle to put in on the first day of the weekly.
Yep.
And it'll be interesting to see how it over the course of this week that candle develops, because they've come down and essentially closed everything that was here, and we can see this wick down here. So we talk about this 4,000. I had an entry to go long on Ethereum at 4,070. So I got wicked in just for a long. But that 4,000 for me feels like an area that will be defended.
Yeah, I don't even think we go there. I think it's around about. If you look at the breakout point from Friday, we effectively closed that fair value gap now on the daily.
Yeah.
So that demand zone has been tapped. So it's then looking at it and going, right, where do we really need to hold on the daily to get above? So I would say if you look at the candles last week, around about 4,420. The bottom of those candles, yeah.
Here.
You start closing above that, then that's where I think that we will range from, basically start closing the daily above that, and then you'll build the liquidity to then pump through the zone, and that's kind of where I expect us to be, probably between 4,420 and 5,000, probably to form around.
Yeah, and potentially look to take out some of this and pull back and consolidate. Because it feels like there's still some more to be tapped up here.
Yeah. And the thing is, if you look at the zone, so looking back to 20 time on my chart in 21. So really, once I see 4,000, it's not far off. Once we kind of consolidate above 4,420, if we gain that, then I would expect some chop. Again, like when I said the other day, like I didn't expect us to probably retrace as quickly as we have since the Friday pump.
No.
Personally, but it's now shaping up. I think it's the 17th of September, the actual FOMC meeting. Do we get 3 weeks of chop, build that liquidity to then kind of blast out this zone?
Yeah.
And then probably
sure.
even within that level that you're looking at there, that 21, if you look at the highs, there's the top, the top formation. 2 seconds. If you look at the highs on the 1st of December and then the 3rd of November, the wicks, not the wicks, the candle closes above on them dates. It's about $2,620. That's probably the next level to kind of gain on there.
What, this area here, or
say 2000? Easier.
Yeah. You can check yours up.
Let me know when it's on.
It is on now.
Yeah, so if you look probably at this candle close around about this level here, make that a bit bigger so people can see it. Around about that level, so that's 2,630. Let's just extend that to the right. Reset. Yeah. So it's somewhere between levels to gain. You're looking at the bottom of here and this next blue line. So some form of range in here probably opens up the upside. And then there's a chart I prepared earlier. This was kind of my view initially, that we would get to around about 5,000-6,000 and then pop back down into here to finish this. It's just, I would imagine there's gazillions of liquidity that sits here. So that was my initial view, something like this. But time will tell.
Yeah, that's the beauty of charting, is everyone looks at a chart differently, everyone looks at different things, but ultimately price goes where price needs to go, as you say. And I think that makes sense. And I think one thing I notice is people don't tend to look too much at the historical, and I think for me the historical, like, you look at those and it lines up perfectly. Like even the level that we drew, I drew a line at 4,420, as we said, which was basically resistance for quite a few of the wicks, and you go across and it just lines up perfectly with exactly where we ranged. You have a perfect level with the candle closes for Saturday and Sunday.
Nothing happens
last week.
by accident.
Like,
nothing happens by accident. This is all planned.
No.
It's all, so what you'll basically get, so we know that this box effectively needs to be mitigated with orders. So what you'll see is when you get to the extremities of the range, this is where you'll see volume come in, because they'll go, right, we're going to push the price. We don't want price breaching above this level here, so we'll push the volume down. And when it gets here, volume will come in, so we want the price to hold there. And that's done by the exchanges and the market makers to keep the price so they can mitigate all of this stuff here. But again, people will be looking at this and going, right, we've got all of these fair value gaps that need to be filled in. And whilst people are right with that it does need to happen, at the same time, the way I look at stuff is go, right, where are the fair value gaps? Right, we've got this fair value gap here. Let's start here. Well, let's just put that in. Right, so we've got that fair value gap. But you actually look, and price has already been here, way back over here. So there's not much really. It's only a little, the actual gap that's here is actually way less, because price has been there. And then funny enough, look what happens where the low was. Bang, perfect. Yeah. So in my opinion, you've got that box there that's unmitigated, where at some point in time, you're going to need to form a range. And you go, right, okay, right, where's the next fair value gap? Effectively, it goes from here to here. Now, you can see price has been basically all the way up here. So it doesn't actually need to go there. And then price has actually been to here. And then you can see where a lot of these gaps, they're not very big, and they're left there unintentionally. So you look at the fair value gap here. Well, it's actually been filled in here. So it's not, price needs to go back to where it needs to go to. And just because you've got gaps here, if price has been there previously in the gaps, yes, it needs to go back there. But that price could pass back to and from this area like multiple times before you actually get a proper consolidation in the zone. And again, that's where I think there's a lot of misconception, where people don't understand how price really should and needs to move. If that makes any sense.
Yeah, agree.
Any sense?
Agree. And I think also they lay there a little bit as bait. I know there'll be a lot of people who will be looking and waiting for those to get filled. And ultimately, I think, and we go back to sort of that price action and that manipulation question, is because they get filled so often, people assume that it's the default that they have to get filled. And then when you want to leave them as bait, you don't have to fill them. And I think ultimately we've seen this with Bitcoin. It was the same thing, is you tempt people in with them, and then
doesn't quite get
you just send it upwards.
But the thing is, people could go, right, this is going to act as support, so I'm just going to long this. And then what will happen, because then you're kind of expecting some kind of consolidation and then U-shaped kind of reversal. But what could happen is you go through like this, or it doesn't matter, just because it's support, it doesn't mean it's always going to be support.
No.
And effectively, anywhere where there's liquidity built in, and there's a variety of ways that you can identify it. It doesn't matter whether it's supply or demand, support resistance, whatever you want to call it. It's liquidity, and liquidity, if price goes there, if it's bullish liquidity where it's been provided here, so obviously people have longed it and you provided the sell, it doesn't matter, because price gets held in this zone, and when it's held in that zone, it's mitigating the open orders anyway. So again, that's where I think there's a lot of misunderstanding of people go, right, price needs to go back to this level here because that's your breakout point and it's previously support system, but not understanding the why and why the price needs to go there. And this is where the level system is quite good, because you either maintain or you lose, and that's it. But it's supply turns demand, demand turns supply, support turns resistance, resistance turns support. It's all the same thing, because liquidity is liquidity. It doesn't matter if it's buy side or sell side. If price goes there, it will act as both a magnet and then also an area that will get a reaction from it as well.
Yeah, agree. And I think it's interesting to look at this and see on the high time frame just exactly where it goes and where it respects. And I think ultimately I look at this and I think it does provide some really, really good opportunity if you were to trade it correctly. I love the level system, and will always sort of swear by that as sort of the way to understand price action.
But the thing is, again, like, where else can we spot liquidity on this chart? I mean, look at that. Again, whilst this is in a like downwards kind of channel here, this is exactly the same. It's basically an area that's been built up as liquidity, and at some point, this was basically. You look at the closes. This is not days. This is not minutes. This is weeks of like a $20 kind of range of like candle closes on the weekly.
Yeah,
that is this is liquidity galore, and it's kind of mitigated this area here and stuff like that. And it's just this will at some point, same as this, it might be 4 years down the line. This could be the liquidity that's used as the springboard as the point for the next bull run, for example.
Yeah.
And so identifying them on charts, I think personally, is a very, very important trading tool that you need to have in your pocket, or you're kind of guessing.
Yeah, 100%. And that range is really interesting. I still remember going back there, and I think this is the importance of zooming out. Is it's such a narrow range, but that was such a choppy period, and you can see that with the wicks. It was just whipsaw galore before the move up. And I remember
we know that there was certain groups of people that might have Liberty and World in their name that was heavily accumulating Ethereum. I think it's their single biggest holding.
Yeah, it's their biggest holding.
So they're accumulating nicely, paying the market makers and exchanges to kind of go, keep price there, will you? We'll pay you for doing it, and we'll just keep adding to our bags. And then what you get is the liquidity that's built here that is effectively mitigating like this area here. And then what happens? You tend to see when you move out of a range, you will push into supply, which then forces you deeper into the demand, which then gives you the fuel that you need to exit the range. So same drill that's up here, whatever the range needs to be, and for however long, at some point you'll probably see the manipulation, which will then push you into the demand, which will then give you the power to exit the range. So that's why it's always, again, if you're a pattern trader and you're looking for, I don't know, something like this, and wedges or whatever they call it, and then go, ha, I'm going to break out now. Or it breaks out and people go, right, on the retest of here, I'll long it, and then it will just go, no, this is the manipulation, then it'll come down here, and then it'll go and take its one stop losses.
Yeah.
So it's just, there's lots of stuff that's not necessarily shown and taught in most environments and or most platforms.
Yeah, agree. And I think one thing I've noticed that's interesting about this cycle, particularly in the majors, is with institutions moving in now, we're seeing more and more institutional type price action rather than sort of what we've previously seen, and how this affects. I know obviously we spoke about certain market makers, and one of the largest ones, their biggest new line of business now is institutional OTCs, and so essentially they're charged with how do we accumulate for institutions at the best possible price. So how would we then manufacture a chart to hold that? And I think that is a perfect example there of just how that.
I mean, this is crazy. Like the amount of money and control this takes for 1, 2, 3, 4, 5, 5 or 6 weeks of keep holding the price on the closes in such a tight range is biblical. It's so much money it takes to do that.
Yeah, that's institution money. That's institutional money. So
that's a very, very important lesson for people to learn about price action.
Yeah, and I think my next question. So I know you come from more of a sort of forex background. Have you? Because certainly I think it's something that I've started to see a little bit. Have you seen more of a shift in the price action of crypto more towards those traditional forex types of moves where we see things like the liquidity grabs and the ICTs, etc.? It feels like it's moving more that way than it previously has.
Well, the thing is, a lot of one of the beauties of a lot of and our friend Blockbro was a keen advocate, obviously, of like the back test trades. So you would get these trades where, so like this situation, you would be looking for a retest of here and then longing it as the back test, or from, I don't know, this point here that you would be looking to short it from there. But you're seeing a lot more where instead of it reacting from these areas, you're actually getting more of the forex stuff where it's sweeping the lows like here into fair value gaps like here, and then reversing. And then not only then reversing, you're not getting the pullbacks that are deeper to kind of retest. You're getting much more pump, consolidate, pump, consolidate, pump, consolidate, and then pump again. You're not, it's a different type, and again, I'm not sure people understand wave patterns as much, so I'll do this very quickly. Not that well. So most people will look for something like this as a wave pattern, and then you would get obviously the correction down, and then so on and so forth. And then they'll use fibs and all of that kind of stuff to do it. What you see a lot more in Forex is this kind of thing. And then you'll get the come back down and you'll fill in the gaps this way kind of thing. Not obviously it won't be perfectly like that. I would call this a more bullish wave pattern. So in theory, this is the kind of wave patterns that you will see if you take the time to look at Ethereum. Let's go back to here. What we're getting that wave pattern. So understanding the different how waves work, and not talking Elliott wave or anything like that, just literally the construction of the candles and the waves as they move up. Again, I think there's people will miss trades because they're expecting the pullbacks, the comeback like to these levels, rather than just pump and consolidate, and which is way more prevalent in the forex world or the TradFi world. So it's I think that's something that is definitely, I think it's happening. But again, is that happening because of the phase of the market we're in? Maybe. Because obviously this is a lot more chop here.
Yeah.
And you're getting the pullbacks. But now, in theory, if we're in the more bullish phase of the bull run, then this wave structure here makes a lot more sense.
Yeah, agree. And it's quite interesting to see how it's evolved over time. I mean, ultimately, we are seeing that wave, and it's I don't know. I find Ethereum just moves so differently compared to anything else. Is this thing will just be, when it moves, it's so explosive.
But the thing is, it's had there's understanding liquidity of like where liquidity sits in the chart, but then you've also got to understand market-wide liquidity in crypto, and Ethereum didn't really, apart from this area here, didn't really have the love, and there's clearly been a plan to suppress Ethereum, and this is, I think, the fundamental issue with crypto. If you're trading stocks, ETFs, well, whatever the commodities, forex and stuff in the traditional market, how many real tickers do you have to trade or invest in? 500, 600, maybe different instruments across the globe, maybe more, maybe less. Or unless you go onto various different platforms. You think of going on to Bybit or OKX or whatever. How many assets have you got to trade then? Thousands and thousands. So the barrier to entry into what you can trade in crypto is basically almost non-existent. You can trade whatever you want, or that there are a plethora of options to trade. So the overall liquidity is not as high. It's far more spread out. And this is where I think a lot of people get exposed, overexposed, and exploited in the crypto trading world, because it's like kids in the candy shop. Why trade 3 charts when you can trade 333 kind of thing? And it's no coincidence that the more successful traders that I know anyway don't trade 6 million tickers. They will probably trade 1 or 2 things, and that's it. And that's whether it's crypto, whether it's for traditional finance, whatever it may be. I think there's not enough liquidity in their assets, and especially you start going into some. Let's pick a ticker, pick a shite ticker with not much. Let's look at that.
Let's go. You've got Bake. I like Bake as a project, but as a trading asset, I wouldn't trade it daily.
I mean, people will look at this and go, but look at where it's come from and how far it can go up. I need to just put some money in. But what's scary to me is, let's have a quick look at Bake as an example. So Bake is 22.9 million market cap. Between us and a few friends, we could probably manipulate the hell out of a chart like this if you had enough of the tokens in the first place. And so does this look like a forex chart or a traditional finance chart? Absolutely no way.
No.
Bitcoin and Ethereum, yes, because they are obviously much more accessible. The institutions want to trade it. Things like most altcoins look like an absolute bag of non-describable words on a family channel. So there is no sense to price action here. There is no, well, this is just going to be, well, how do you trade this? And again, this is where the levels come in. You go, well, you can't do a wave structure on it to go, right, this makes sense. All you can really do is go, well, this is a level of support that lasted for how many? A year. That's a support level, and it's lost. So we've got this floor here that's a support level, lost. So in my eyes, anyone people will be going on this and going, well, the risk reward is massive. I can make gazillions here, but you're not at support. There's no reason why this can't just keep going down to zero in effect if it wanted to. And again, people will go, it'll be much safer to probably wait for, if you was going to trade it or invest in it, to wait for support to be regained. Because here you can just keep bleeding down. I mean, one of the, another little favourite that we can pull up, what was it? A dot.
That had a good pump the other day. That was a scam pump and a half.
So we obviously the people that do know that this raised one of the biggest, was it 170 odd million for the pre-sale?
Yeah.
You can't trade this price action. This is just nonsense. And this got down to like 1 or 2 million market cap. So you crush hopes and dreams. So all of the people, 176 million in or whatever it was, you just keep forcing it down on perps whilst it was being listed. It's still listed. People just start selling, and then what does this? When you get down to this level, the volume drops off, and it just enables a select few people to just go, right, one day, when we feel like it, we've accumulated 90% of the supply. Then they like deploy like the value of a Twix or whatever it was you said the other day, and you get a 5x candle out of nowhere, and then people start FOMOing in, and then what happens? See you later. Thank you very much. We'll take our money back, and then so understand like this stuff where support is. This is a very, very extreme case. I don't even know where support is. Let's pick another one.
I don't think there is support, is there?
Let's have a look at self-chain. So we know that this is a good project. Support here. Would you bid here? Unless you're going, right, unless you've got insider knowledge that you go, right, this is a good project, I know there's good VCs in here and stuff like that. Outside of just saying that this is a pure gamble, I'm just going to bid this, there is no, there's no support there to bid it at all. It's a gamble. No. And the way I see this is, if it's fine bidding here, if you're trading on perps, then you're an idiot in the nicest possible way. But if you're buying it, there's nothing wrong with buying here, but you would go, in my opinion, you just go, right, this is gambling money. I am gonna, whatever my allocation is to buy, this goes into my 5% meme pot that is, and I'm gonna treat it accordingly. So I expect this to go to zero. But there's nothing to here to bid. And what my theory is, what I think will happen, either these just go down and die forever, or you get the DOP situation. And at some point, when the proper money rotates into small to or mid to low caps, you won't even get a chance because you'll just get a candle like that.
No. Yeah, exactly. These are the types of things. The way I approach these, and I've actually had quite a good one that's occurred over the last few days. This is the type of stuff where, in my opinion, not financial advice, is you set a DCA of however much a day, like a small amount. You run it, and you look at this chart and you put in limit sell orders well ahead of time, and you forget about it, is how I approach these. And then, because you won't get a chance to sell, like that DOP one, for instance, like if you were actually holding that, you would probably have had 10-15 minutes to sell, if that. And yeah, one that probably quite a good example of this is if you get the bio chart up. So bio, this is one that I'd had a DCA running. I'd actually forgotten about, to be honest.
Any exchange?
Until any exchange works.
Perps or doesn't matter.
It doesn't really matter.
That look about right?
Yeah, that's the chart. Yeah. So when we talk about how price action works and how to approach that, I just had a DCA running on this, a daily DCA running on this, I think since like March. And I just had my limit sell orders in place. And but like that's the sort of stuff you get. Like,
well, the thing is, you can't really chart it, and it gets released. This is just an exchange dump, I'd imagine.
Yeah.
Same old. And you've basically got to know the project, got to know the BCs, and then just go, right, what am I? Again, you wouldn't be trading on perps. Well, I assume you're not trading on perps.
No.
So you buy your spot, and you go, what did that do in a couple of days? Another one that's just done a 5x out of nowhere. So it makes perfect sense to me. And again, if you're doing 5x, not as leverage, but 5x as a return, and they're pumping out of nowhere, as long as you go, well, I'm going to put money in it, I'll cut it if it gets to a certain point, or I'm willing to lose all of it because of what it is. It's in the gamble pot. Then it's fine. There's nothing wrong with these at all, and you've just got to have that discipline of. And again, I think people have, some people, when it comes to perps trading, have a stop loss, TPs and entry points. I would guess most people on spots will probably go, my TP is 50x because someone on crypto Twitter said it's going to go to 600 billion market cap, so that's where I'm going to set my TP. Again, I might be slightly disingenuous there to people, but I don't think people have a plan for it, spot. And if you're trading perps, the lower the time frame. So I'll tell you another one I was looking at the other day. You look at, where have I got it on here? Let's have a look. Varsity. So this has had a bit of an exciting time. But people will. This has gone down to, what was the market cap on this? 14 million. So naffle. And then I've seen people looking to trade this on like a 15-minute chart. You go, well, I know this candle was an anomaly, but you've got a 75% candle there. But let's even make this a bit simpler. Right? Let's just pick an average candle. So let's go something like this candle here. So as an 18% candle, so even if you go, that's your daily candle, and then people are looking at that sort of stuff on a 15-minute chart, and you are looking at like a 2 or 3% stop loss. And you go, why you understand? If you're looking at Bitcoin, you go, right, the average daily move might be 3%. Or so. Having a 1% stop loss or 1.5% stop loss makes perfect sense. Having that on an altcoin, or people, when I hear people saying I'm scalping altcoins, fair play to you if that's your plan. I will say most people, if you can show me some form of trading diary whereby you are successful at scalping low cap altcoins, I will believe you. I would say if you are scalping low cap altcoins, you're highly probable to get liquidated or lose trades, because it's not a consummate kind of risk to what the chart's telling you, and you should be right. The lower the time, the lower the liquidity, the higher time frame you should trade it. So if it's got 2 million of market cap, look at it daily or weekly, it will move 2, 3, 4, 5x out of nowhere at some point in time. If you're trading gold, by all means trade it on the 1 minute, because it's a $23 trillion asset. That's my rule, basically. The higher the liquidity, unless I'm in the degen mode, which happens very well. But the higher the liquidity asset, the lower the time frame I'll trade it. I think that's my semi-wise words for the day.
Yeah, and ultimately, to take profit on these things, you've actually got to have someone who is going to come in and buy your TP, or to get out of it, you're going to have to find someone who's going to buy your stop loss. And
that's where you get the slippage.
Yeah.
Massive slippage. And then at the same time, we haven't seen it quite as prevalent in recent weeks. But it won't be long until you start seeing a swathe of delistings again. And you could be in a purchase. I mean, don't get me wrong, it cost me a lot of money when I was in the DOP trade and I was on perps, and it got delisted, and then automatically, then straight away you got no choice but to get out of it, and then the price gets crushed, and it is what it is. So yeah, I think it's just knowing what you're trading, what you're up against, what the potential pitfalls are. You're not going to, I would say it's highly improbable, not impossible, that Bitcoin's going to get delisted. It's highly probable that VRA will get delisted at some point. So just take that stuff into consideration. And I'd say the exchanges know all your information. I'll stop sharing my screen at this moment and come back and see your pretty face.
Thank you very much.
They know your information. They know people's liquidation prices. They know how much they are in the hole for. And don't underestimate that they, whatever trade you take, they are on the other side.
Yeah.
They are much bigger than you. They've got much deeper pockets than you. And if they go to a certain point and go, we need to, it's not even grab the liquidity, because if they keep providing unlimited liquidity, it affects their solvency as an exchange, and then they have to buy more crypto to have on their balance sheet and stuff like that. So they have to fundamentally do it anyway to kind of not just balance their books and make some money, but also to help their solvency ratio.
Yeah, 100%. And they can stay, the markets, what's the saying? The markets can stay insane longer than you can stay solvent. And I think
yes,
ultimately they know where the price is going. Like Binance know exactly where the price is going, for instance, because they've got enough control over to do it. So they will lure people in with some of this price action. I think that's probably, the key takeaway that I'd say to people is go away, open up a chart, and just look exactly at every candle that we've gone over and look and think, if I was a market maker, why would I do this? And why would I manufacture this candle? Because every candle we've got is pretty much made, because crypto in the scheme of things, crypto is such low liquidity that pretty much every candle, bar some big mishaps or big news events, is manufactured to look a certain way to draw you in. So look at every candle and go, what about this candle makes me either want to long or short? And then think, if I was trying to make money as a market maker on this candle, why would I manufacture it to make it look the way that it does? And I think if you learn to sort of shift your mindset and look at things from that perspective, it does start to give quite a clear indication of just why things move the way that they do.
Nothing's random. That's why everyone that people go, oh my God, I can't believe the news is going to come out and it's going to be, the rate's going to cut and we're going to go to the moon. Well, if you already run up, a term that people will say front running, it'll get to the happy news. You might get a little victory pump, but what you might get? You might get that manipulation into supply and then go bang, crash back down.
Yeah.
The charts don't lie. Now, are we going to get it right every single time? Absolutely not. The probability of getting it right or being able to see a clearer picture is located on the higher time frames. The lower the time frames you go, your margin for error is incredibly tight. So I was looking at EU earlier, for example. So my stop loss would have been 0.09% on a scalp on Euro US dollar. But that's fine because it's the most highly, I'd say probably the highest
most liquid asset, probably most listed liquid asset pairing probably in existence.
Yes. So it's fine. It's not going to move 10% in the day. It might not move 10% in the decade. It's just
depends what the orange man says. To be honest, he'll probably give it a very good go.
It could give it a good go. Again, it's not going to happen in the day.
No.
It takes so much money to manipulate the price on these assets.
Yeah,
it's biblical because it's not just physically going right. Gold's $23 trillion asset class. We're going to move it up by 10%. It's not suddenly 2.3 trillion to move it up because then you've got to cover all the shorts that will come in on the that side of it as well. So it's biblical amounts of money to move assets, big assets, biblical amounts, and that's why you need the coordination of exchanges, market makers, liquidity providers to go, right, we're all pushing a button at the same time. It's not random.
Yeah, I completely agree. I was actually chatting to someone about this the other day because and it's a pretty, that's the wrong chart. If I get this one up, because it'd be interesting to talk this through before I drop, it's a Coinbase project, so obviously it is very well marketed. I pointed out this, and this is why the level system is so good, especially like when you have quite manipulated charts. This actually moved really well in the levels. I charted this out when it was like here. That is, for me, that was where my eyebrows were raised somewhat.
Yeah.
Is that was one that felt someone's blatantly walked that up and then nuked it back to where they started to trap people in.
But again, where you look at the wicks at the top of that formation, that pushed it into that fair value gap that was probably like the 14th or something like that.
Yeah.
13th. Right. Yeah.
Yeah, 14th.
Yeah. Again, it's not. It's been walked up. It's been able to mitigate some of the order book, and then that enables then the next move down, or the added fuel to move it down. Like I say, the pure price action, and I remember this when I first joined CSE and I was talking to Block Pro about it, and understanding pure price action, and not just price action, but just the why. Why does a candle need to go there? Why does it need to? What role is that candle or walking the price that level? What is it achieving? And I think if you can learn to grasp the why. Now, don't get me wrong. Some people might not want to know why. They'll just go, "This is market manipulation and outrageous." I'm a why guy. I like to know the why of why something's happening, and then at least, obviously we've talked about macro a lot on here before, but it's just understanding the contributing factors, and you might not take that into it. It might not matter at all on a 5-minute scalp on gold, which I just closed my short. But at least whatever happens on a weekly, you can extrapolate the same thing down to a 1 minute or a 1 second chart if you want, because they're all doing the same function. The candles are candles, and they're all doing the same thing.
That is just ridiculous. Yeah, I'll tell you that. There's another one. I actually have a short position on this. This is one that I chatted with our friend, Mr. Stonksy, about. This has to be one of the most manipulated. Like, the state of that as a chart is pretty horrible, isn't it?
So again, looking at that. So you've had from probably the 16th, it looks like, of July, you've had that like accumulation down below. There, June. Yeah, that accumulation. Then you've had that rapid expansion, and then this is where people expect then it's pull back. So then it's reaccumulated, which is in the gap to the left, which you can see from there. Yeah, where the price hasn't been. And then it's basically laddered up. So what I would expect probably here, if this comes down, it will come down to that 4.2 level quickly. And then if it drops down, where that fair value gap, that's where you'll have the accumulation range. And that's where you might get the reaccumulation for the next leg up. Again, I've not looked at the chart, but just around about there.
Yeah.
But it's actually, do you know what? It'll probably be just where that box is. It probably comes into that fair value gap, and then maybe touches that weekly level, 3.5.
This one here, yeah, and it'll tease this gap here.
Yeah, but these gaps on charts where you get fair value gaps or price voids and stuff like that, again, they are left on the charts for a reason. They're not just randomly they go on there. They're used as fuel for later moves, basically. Yeah. And again, people go, it will retrace back to the fair value gap. At some point, yes, but it's the why does it need to retrace to that fair value gap? And a lot of the time, it might be the fuel for the move up, or it could be used as a distribution zone that creates another leg down. Either or. And that's where, again, the buy side and sell side doesn't really matter. Liquidity is liquidity, and it will be used as such.
Yeah, that's exactly what I was looking at for this. I think for me, if I zoomed out, that was blatant. That felt blatantly as an obvious liquidity zone, given the fact that you've seen. That's just ridiculous candle.
That's just a blow off top, right?
Yeah. And we can see it came in, and then it should be walked up. And someone will have done I don't want to accuse anything, but an insider or insiders probably bought quite large positions here.
Yeah.
In order for them to sell around here. To provide the fuel to go back down.
Yeah.
Yeah. That's really interesting. I would love to carry on, but I have another engagement at 11, and I need more coffee. And I probably need to look at some crypto charts, given the fact that I'm talking about crypto. So I'll be on KuCoin's Twitter in 7 minutes to talk all things Ethereum, future of Ethereum, DeFi, and just general outlook. But thank you so much, Justin.
As
always love having you on, and I will reach out and we can get another one on, because I love these. I learned so much, and hopefully anyone tuning in.
I'll largely make it up as I go along. So as long as it sounds semi-intelligent.
It's as calculated as the candles we see on the screen. But it's always a pleasure, and it should be a fun day. I'll drop you a message later and see how it goes. But thank you very much.
Cheers, Wiz.
Coffee. So see you later.